Hey guys, it's Justin Goodbread, Financially Simple, sitting in the office today, getting ready to meet with one of our dear clients, and we're asking the question, or we asked the question last year, and now I had the results, so this is kind of cool. Let me lay the stage. We had a husband and wife, business owners, typical. They had the business split 50-50, so 50% ownership between both of them. Their income was significant, and so they were paying self-employment taxes up to the full $118,000 for last year on both of their incomes. So both their incomes on each side of that equation was higher than $118,000. So we were looking at their business about July, saying, is there any way we can cut the taxes? So powwow we had with my team, their CPA, and a tax attorney involved. We're sitting around the table. And then this isn't a big business. They make about the gross revenue about 1.4 million. So it's not a really big business, if you will. Good business, solid. They have a good life, and they were making some great margins on the business. But we were trying to figure out, man, is there a way to cut taxes? So that three-legged stool that I'm talking about often with the CPA, the tax attorney, and a good CFP as a business owner that thinks like us, we're throwing stuff against the wall. All of a sudden, I asked the question. I said, why don't we make spouse number 2 an employee of the company at a fair rate and then move the full ownership to spouse number 1? Now, I'm not going to try to unpeel that onion in a short video. Long story short, by doing that, by moving just the taxation or the way the ownership was made around, we ended up saving taxes, all things being equal, just by moving the ownership. Now, the disadvantage to that is the spouse who we reduced their ownership in the company greatly is not maximizing their benefits for Social Security. What this couple said, and I have a tendency to agree with them, is look, spouse who still owns the majority of the company, they're maxing out their Social Security benefit, and whenever they retire in about 5 to 10 years, they're going to have fully maxed out benefits for the most part. Spouse number 2 may not, and because they're not paying Social Security benefit, Social Security tax on the full $118,000 they were before. Both parties in this couple said, we don't care. We would rather save the $30,000 now, invest it, and let us invest it ourselves, either into our business or into our investment account, and we can grow our money better than the market. Challenge the thought. I'm not saying it's always applicable. I'm not saying it's always right. There's never an always. It's always it depends, right? So if you're running into some really good margins in your business and you're running into some taxation and self-employment tax is kicking your tail, or you're looking at it saying, like, holy cow, my tax checks are, my estimated tax payments are higher than many people's annual income, which happens a lot. Maybe the time to sit down with your team, your CPA, your tax attorney, and your certified financial planner, business owner, CFP that thinks like a business owner, not some local yokel who is a stockbroker. That's not who you need. You need a true planner involved who can throw some things that drops their egos at the door and works as a team to help you maximize your income and maximize your net worth. And minimize, for heaven's sakes, let's minimize the amount of money we pay to the IRS. It's very technical in what we did, and there was 3 professionals coming out for different angles. Long story short, that one meeting saved about $40,000 for the client in taxes, which is not insignificant by no means. So there's ways you can save on taxes. Get your team together, get your planner, get your CPA, get your tax attorney. Hoorah, let's make it happen. In the meantime, make it a great day.